Hey everybody, it's Mike, and I want to do a video now about trading strategies. Now, I'm going to have to use Thinkorswim for this because I want to actually run automated trading strategies on Thinkorswim so you can see some of the ins and outs of trading. So I'm going to use generic strategies that are already on Thinkorswim. These are going to be based on indicators like Bollinger Bands, moving averages, MACDs, things like that. They're going to have their own sets of rules. I will illustrate what the rules are. Now, before I go any further, you're probably about to ask this question. Why don't we just use Thinkorswim for Funder? How come we don't use Thinkorswim? It's so much easier, or I'm more familiar with it, etc. Well, the simple answer is this. Thinkorswim is not built for proprietary trading firms. They don't have the functionality necessary to run for a proprietary trading firm. If they did, we probably would have went with them because most people would be familiar with them. We're familiar with them. But the problem is this software is not in any way designed for proprietary trading. So it's a wish, you may have it, but most of us, unfortunately, for those of you who are not familiar with the industry, you don't actually understand what is needed to run a proprietary trading firm. You don't understand the risk management systems that have to be in place. You don't understand how it has to be structured. And long story short, Thinkorswim is not set up for this. So therefore, we can't use it. In fact, most of the major brokerage platforms out there for retail traders, they're not in any way set up for the ability to do what we're doing here. Okay, so to be a proprietary trader, you have to use software that's designed for that, and therefore that's why we use what we use. Okay, now having said that, let's go ahead and throw a strategy on this chart. So firstly, let me just change the time frame. I'll just make the time frame, let's make it 90 days, 5-minute time frame. And I have it, it's currently showing overnight. I'm going to change that. So give me 1 second. We're going to turn off overnight. There we go. So only showing regular session hours. Now, the unfortunate thing is the strategies are going to run overnight. So for now, let me just, I'll change it back because they're going to run overnight, but it's not important for what we're learning here. For now, I'll just leave it to where the trades will happen whenever they happen. Okay, so that means they can be held overnight. Obviously, that's not what we're doing. So if I look at this chart, this is the Dow Jones, the DIA. Okay, there it is. Going back 90 days, I can see everything that happened. All right, so let's suppose I wanted to use a basic technical strategy on this. What could I do? I'm going to go here to strategies on Thinkorswim. And let's just start off with something very simple. Right down here, I have Bollinger Bands with engulfing. I don't know what this is. Let me click on it to find out. And what I'm trying to find out is if it has, okay, so this only has buy to open, sell to close, sell to close, which means that this only goes long, it doesn't go short. Whether or not that's a problem depends on, what I want to do. I'm going to skip that one. And I want something that goes long and short. So let's see, ADX trend. Let me look at that. Let's see here. It's got buy to open, sell to open, good. Sell to close, buy to close. Okay, so it has entries for buying and selling. So it has sell to open. It has buy to open. It has, looks like, two different entry triggers that can be used. Like there are two different order entry strategies to buy to open. And there are two strategies for sell to open, which means it goes short. And we have sell to close. Now, of course, you're looking at this maybe if you don't know anything about ThinkScript, you're probably looking at this and saying, what on earth is that? Well, if you don't know ThinkScript, don't worry about it. Just all I'm telling you is what this is doing. It has two strategies to enter, two strategies to enter as a long position, two entry strategies as a short position, and it has one exit strategy one exit strategy to sell to close, which means you'll be closing a long position, one exit strategy to buy to close. Okay, so I'm going to use this ADX trend. Okay, now I'm not changing the settings. I'm just going to let it go as it is. So I hit OK, and now it's showing me a track record of what the strategy has done. Let me explain. If you see here, it says ADX strong downtrend short entry, SE. It's selling 100 shares. It's getting short right there. That's the entry right here. And then this line here, since it's in blue, means that we're making a profit. That's what it means on Thinkorswim. So if I move here to the right, okay, it's going to keep going. And there is my exit right there. That's my exit, SX, meaning short exit. So in other words, the strategy went short here and it exited to buy out of the short there. So it went from negative 100 shares to 0 shares. That means it's done. Now, that was a profitable trade. So if I hover over here, I can actually see up at the top, right up around here, that the strategy was able to generate a P&L of $273. And I know it's pretty small. It'll be hard to see, but that's what it's actually showing. Okay. So I really won't be able to do any more, but just tell you what it says. But here, let me see if I can. Well, I was going to try to zoom in to make it larger, but I don't think I'll be able to. So in short, just take my word on it that this made $273 off of a 100 share short. Now, if I look at the top, I can actually see the P&L results. It says FPL, and it gives me a number. In parentheses means that I'm losing. If it's not, it means I'm winning. So this strategy, at the end of all of the activity that's been done over the last 90 days, this strategy lost $1,465.95. Okay, that's the actual ending P&L. It actually looks like it's currently in a short right here. It looks like it just entered one. So this is still open. There's still a trade open that started right there. So this is still in the market. Now, what I do like about this strategy, which is different than most on Thinkorswim, is that it's not always in the market. Most of the strategies on Thinkorswim, as soon as the long position is exited, a short position is entered. As soon as a short position is exited, a long position is entered. In other words, the strategy just flips long and short. It's always in the market. That's normal on Thinkorswim strategies, the default strategies that are on the system. But this strategy actually is more realistic in that it's not always in trade. It's sometimes in trade, but the results are not good. It's a loser of $1,500 or so. So what can we do to fix that? How can we improve it? Well, the only way to improve it is if we actually looked in detail about what it's done. We have to know what's going on. But normally what people do is they're going to first look at the chart and they're going to look at the losses, which will be these lines that are red, and try to figure out, okay, is there a way I can stop it from losing money? Is there a way I can get it not to enter trades? So the easiest way to check is to say, well, let's change the settings because maybe the settings are just not right for this particular stock. Okay, so let's try that. Let's go here and let's look at what we got. So as a lag, I don't know what that means. So let's look in the question. Defines the period upon which the lowest ADX value is to be found. Okay, not sure what that means up front, but I can guess. Trend level has to be 30. Let's see what that means. Defines the maximum ADX level at which strong trending conditions are recognized. Okay, now that makes some sense. What it's basically saying is the higher this number is, the more has to happen before there is an actual entry. But here's an interesting point. This actually says max level, the maximum ADX level at which strong trending conditions are recognized. Okay, so actually it's a top value too. And this says critical level defines the minimum ADX level at which trend development is recognized. Okay, so this is actually interesting. So it's basically saying this. If the trend level, however they define it, goes above 42, no entry will take place. Basically, it's saying that the momentum has been going too strong for too long, and it's basically saying, hey, if it's been going too long for too strong, if I get in now, it's probably too late. But it also saying a critical level, meaning that no trend would be recognizable once the threshold drops below 22. Now, I'm not sure how that that actually is functioning, but I think what it's saying is that before the analysis is made on whether or not there's a trend, there must first be a critical threshold of 22 reached. And then once you pass 22, if it hits 42, then it triggers. But I don't know why that's necessary, but okay. That's something in the strategy. I would have to study it closely to figure out why they put that in. This is the moving average length. This is saying the period that the calculation is made over. Now, if I look at the stock in question here, the Dow, I would have to say that if you look at the way the chart is moving, this doesn't appear to be a stock that's making a lot of consistent moves in one direction. In other words, there's more of a tendency for it to go for a short time and then change direction, or does not continue. So that means that perhaps the settings on this are too, they take too much to get a signal, and then by the time the signal is generated, it's too late. So one way I could possibly change that, this is the length. Hold on, let's see. The period of calculation for the average directional index. Okay. So maybe I could just say, you know what? Maybe I should change the moving average to something smaller, right? So then I get a quicker signal. So let's cut it in half, 25. Let's see what happens if we try that. Okay, so now my total P&L is now negative $403. So it's better than what I was at before. So let's try it again, see if I reduce it some more, does it improve more? So let's bring it down to 20, see what happens. Okay, now I actually went back to negative 1400. So it doesn't seem like that helped. So maybe I'll go to 22, see what happens there. Okay, so it doesn't look better. Let me try something else. Let's try to move it up to 30. See what happens then. Okay, now I'm in a slight profit. Okay, so let's move it up to 33. See what happens. Okay, still in a slight profit. Not much of a change. Okay, let's move it up to 36. See what happens. Okay, now I'm in a loss. Okay, so according to this, so far, let me increase it a little more to 40. And now I'm in a bigger loss. So it seems like for some reason, let's say 28, just out of curiosity, let's see what happens. Oh, 28 looks a lot better. Okay. So let's try 27 just to find out if it's any better. Nope. So 28 seems to be the best setting. 29, let's see, similar. So 28 or 29 seems to be the best setting for that. Okay. Now I go ahead and say, all right, well, I did my trial and error and I changed the settings, and let's see what else I can change. So it says here that the ADX has to be based on 14 periods. I don't know. Let me leave that alone. But let's do the trend level. Maybe I want the trend threshold to be lower. Maybe I want it to be 16 instead of 22. Maybe I want this to be 32. And maybe I want the trend level to be 26. Again, I'm just winging it. I don't know what these results are going to be. Maybe I want this to be an exponential moving average because that will change direction a lot faster. And the Hall moving average will change even faster than that. Or maybe I want to do a weighted. Let's just do a Hall since this is mostly based on price direction. Okay, so that didn't seem to work, but I did change a lot of the settings here, right? So maybe I changed this to 29 and I switched it to Hall. Let me just restore the defaults. Forgot. Can you do that here? Uh, let's see. Yeah, I don't know how to do. I don't know how to put it back to defaults. So what I'll do is I'll just delete it, re-add it, and I'm just going to go ahead and change this to 29, and let's make this a Hall moving average. Let's just see what happens. Okay, that didn't work too well. Let's change it to a exponential moving average, see what happens. That didn't change much either. So, all right, we'll leave it at simple. Seems like that's the only one that's working. Okay. And now let's see if I want to maybe change the threshold a little bit. So maybe I say make this 26 instead. Let's see what happens. Okay, not helping. So let's make it 20, 27. See what happens. That seems to be a little better. Let's go to 28. Not better. Okay, let's go to 29. Our original setting was 30. And okay, that didn't help too. That I mean, it got better. So um, let's go to 31. Okay, not much better. So I guess leaving it at 30 was the best one. Okay, now I can keep doing this over and over. If I had a computer doing it for me, it could keep modifying the settings until eventually we figure out what's the best result of settings for what we're doing for this strategy. But here's the problem. And some of you already know what the problem is. What have we been doing so far? I've been fitting the strategy to exactly the data that's on the screen. Okay, I know already that I've got 90 days of data for the Dow Jones, the DIA, and all I'm doing is changing the settings on the strategy to see what's giving me the best results. Now, it will take a long time to change the settings enough times to get the best results, but eventually I could figure out what is the most profitable set of settings for this. But what if I change the symbol to something else? I had DIA there. What if I change it to another stock? Let's say I change it to, I'll try to do something similarly priced. Second. Let me see what else I can do. Um, let's do, let's do NVIDIA. Not the same price, but let's just do that. NVDA. Okay, so NVIDIA made $3,700, so that seems to work just fine for NVIDIA. Looks like it did really well for NVIDIA. Let's change this to the SPY, Dow's cousin. Okay, made $11 on the SPY. Let's try QQQ. Made $2,700 on the NASDAQ. Let's try the Russell. Okay, lost $1,700 there. Let's try IBM. Lost $1,600 there. Let's try Tesla. Made $2,900 there. Let's try Meta. Lost $1,000 there. Okay. Let's try. No, that's too cheap. Let's try Target, and that made $514. So the difference is, I mean, these are similarly priced stocks. They're not like they're that far apart in price. Some are moving a lot more than others. This is a momentum based strategy. So, generally speaking, the more momentum there is in the symbol, the more likely it is to generate a profit. In other words, the more the stock swings around, the more likely it's going to generate a positive return for this particular strategy. However, if I deal with the stock that's fairly range bound or doesn't move very far in any direction, notice that my results are not as good. So, what is this suggesting? What this is suggesting is that it's not actually the strategy itself that's making the money for us, it's the stock and the way it's behaving that's making the strategy work. In other words, if I apply the same strategy to the wrong thing, it's not going to give me good results, but if I apply it to the right thing, it will. It's not just a matter of changing the settings. Yeah, maybe there's some things about the settings that need to be changed. I would agree. There would be ways to modify any strategy to where it could automatically detect the type of stock it's dealing with, what type of volatility is typical, type of performance is typical, and then it could actually change its settings to reflect the type of stock we're dealing with. But all in all, this is a momentum strategy, so therefore you need momentum for it to really work, which means that if you're chasing after things that don't really have a lot of momentum, which the Dow does not, you might make some money over 90 days, but it all depends on exactly when you got in, when you got out, which will, and it's very random what the results will be. Just changing the settings by a little bit gives very unpredictable changes to the results. In other words, if I start modifying any of these strategies like we saw, just 1.1 change from 29 to 32, which is not that big, can actually turn it from a $500 gain to a $1,000 loss. And what that really means is that this strategy doesn't have any particular edge. There's nothing about it that's really going to give you an advantage from trading because it's not really based on any reality. It's not based on anything that's concrete enough that you could expect to make a profit off of that. Now, the only way to really do a successful strategy is if we're trading momentum and that's all we're concerned about, we got to find stocks that are moving. Now, sorry, TSLA. Tesla has been moving a lot recently, right? You know it has. We know it's had these big swings down, big swings up. And as long as it's doing that, a strategy like this can actually work because the stock's moving far enough in one direction or another. However, I would also argue that even though this strategy does work better for a stock that has a lot of swings in price, we don't really need this strategy to do that. We could do the same trades just by observing how the stock is moving, trying to identify where there might be support or resistance, which we don't have any indications of here because we're not using anything that's going to tell us that. So in the next video, I'm going to look at what are some ways that we can quantify potential support or potential resistance. And I'll just go over one particular way we can, and we can look at how we might be able to apply that instead.